Dividend investment is a popular strategy for investors looking to generate a steady stream of income from their investments. While many investors choose to focus on growth stocks, there are some investors who have made a fortune by investing in dividend-paying stocks. Today we'll take a closer look at the world's most successful dividend investors and what we can learn from their investment strategies. When it comes to dividend investing, one name that immediately comes to mind is Warren Buffett. Buffett is widely considered to be one of the greatest investors of all time and has made a fortune by investing in dividend-paying stocks. In fact, many of his top holdings are companies that have a long history of paying dividends, such as Coca-Cola, Procter & Gamble, and Johnson & Johnson. Buffett's net worth is over $108 billion as of February 2023, making him the world's fifth wealthiest person. But dividend investing is not a new strategy. John D. Rockefeller, the famous American industrialist, was also a big believer in dividend investing. Rockefeller built his fortune by investing in dividend-paying stocks, particularly those in the oil industry. In fact, he was one of the largest shareholders in Standard Oil, which paid out a significant portion of profits as dividends. At the time of Rockefeller's death in 1937, it is estimated he had a net worth of $1.4 billion, which was the equivalent of 1.5% of the US GDP. Another famous dividend investor is Peter Lynch. The former manager of the Fidelity Magellan Fund, Lynch was known for his ability to identify undervalued companies with strong fundamentals, including those that paid dividends. One of the most famous investments was the financial services company MBNA, which he purchased in the early 1990s. Lynch saw the potential in the company's credit card business and its strong dividend payout, and the investment turned out to be a huge success. Peter Lynch's net worth is estimated to be $450 million. Benjamin Graham is often referred to as a father of value investing and is known for his investment philosophy of buying undervalued stocks. Graham was also a big believer in dividend investing and saw it as a way to identify companies with a strong financial position. He once said, "In the short run the market is a voting machine, but in the long run it is a weighing machine." This meant that Graham believed that over the long term the value in the company would be reflected in its share price, and dividend-paying stocks were a good indicator of a company's financial strength. Sir John Templeton was another successful investor who believed in the power of dividends. Templeton was a value investor who believed in buying stocks when they were out of favour with the market. He also believed in diversification and was a big proponent of investing in dividend-paying stocks from around the world. In fact, he once said, "If you want to have better performances than the crowd, you must do things differently from the crowd." Finally, we have Joel Greenblatt, the founder of Gotham Capital and the author of the book The Little Book That Beats the Market. Greenblatt is known for his investment strategy of buying good companies at bargain prices, and he also believes in the power of dividends. Greenblatt once said, "The secret to successful investing is relatively simple. Figure out the value of something and pay a lot less." Similarly to this, investor Charlie Munger once said, "Over the long term, it's hard for a stock to earn a much better return than the business which underlies it earns. If the business earns 6% on capital over 40 years and you hold it for that 40 years, you're not going to make much different than a 6% return, even if you originally buy it at a discount. But if you buy a stock that's earning 6% and you buy it at a significant discount, say 50%, you can double your return." So what can we learn from these successful dividend investors? First, dividend investing is a proven strategy that can generate a steady stream of income over the long term. Second, dividend-paying stocks can be a good indicator of a company's financial strength and can help investors identify undervalued stocks. Third, diversification is important, and investors should consider dividend-paying stocks from around the world to maximize their returns. Finally, it's important to have a long-term perspective and be patient with your investments, as compounding returns from dividends can be a powerful tool for wealth creation. Whether you're a seasoned investor or just starting out, dividend investing can be a valuable addition to your portfolio. By following in these footsteps of these successful dividend investors, you can increase your chances of success and achieve your financial goals. With the right strategy and a little bit of patience, you too can become a successful dividend investor and enjoy the benefits of a steady stream of income from your investments.